Happy New Year, everybody. Woohoo! We made it. 2025. What a crazy year. 2024. What a crazy year. So many things to look back. I'm considering doing a video. Beautiful here, balloons. I'm considering doing a video at some point about all the major events that took place and what those can predict for the next coming year. But before I go there, hair's a bit crazy. Um, I have found something interesting I want to share with you, and I think this might give us a little bit of a perspective heading into the new year. Bitcoin, interest rates, bonds, government, central banks, and a little bit of a perspective for what to expect coming into the Trump policies. Alrighty, let's get into it. This is the DXY. Okay, we talked about the dollar. I'm not going to dwell here too long, but if we look at the pricing over here, the month has opened with a red candle, which suggests that after a 3-month rally, what happens usually after a three strong move like that, especially when it's closing above wicks, you get a pause. It could be a pause that suggests heavy selling, or it could be a little bit of this zigzag. We don't know. The dollar has been very, very resilient, as one would expect. Moving into something that I think is very interesting are the front end of the interest rates. We looked at the 20, 30, 10 year, I mean, not 20, but 10, 30 year. Now I want to look at the first few months because that often shows, the smaller time frame can often show where we're heading into when it comes to interest rates, not charts overall. That's a different story. Look at the 1 month. We're seeing that the 1 month typically moves much forward in a much faster pace, and it forecasts what the longer interest rates will do. Now, the first month, as we can see here, this is a huge topping tail. This wick here, you could say, was consolidating, but now we're closing below this green wick. Now, this curving is what I've been telling you about, what I've been noticing with the interest rates. Of course, I speculated that if interest rates continue to rise year end decisively above certain levels, then we could expect 5% interest rates. This is suggesting now, the rounding here is suggesting that the trend might have ended. Okay, so it was a very long trend. Look at here. It took a few months, few years, 2 years, I believe. Yeah, we dropped here in these minimum levels, even minus to some degree, and then we exploded higher. In this situation alone, we can't extrapolate too much, but could this be the beginning of the sell-off in interest rates? This is the 1 month. Let's take the second month. The second month, again, highlights the incredible move. Now, when you notice the moves of the longer rates, it doesn't have this tremendous move, right? Which again forecasts what is to happen in the longer rates. Again, this is a 2 month. We see here this rounding, a lot of red candles, heavy selling. Look at this wick down. There's a lot of pressure coming down. Where could this land? Okay, interesting. We could do some Fibonacci here, but I see that at 3.8, if this drops below 4%, then it could very well drop down to 2.5-ish, that territory. Now, if we look at the 3 month, the 3 month is doing the same thing, right? You have this rounding at the top and there's this downward. So from 5.5, we're coming down to 4.259%. Okay, when you look at the 2 year, the 2 year here hasn't really moved much. Okay, we haven't seen much of a move, a little bit of selling, but hey, at this point, this shows weakness. This bounce here alone shows weakness. Typically, when you're getting 5 points to the downside, it suggests further downside here. Okay, Again, we discussed about this. So, but the front end is very interesting, and it doesn't normally do this. When the front end, when these first 2 3 months start selling heavily, okay, like over here, that means that it has way more to go. It's not like a stock where it rebounds. No, this is as interest rates suggest, because they follow inflation. They follow the rate of inflation. This is showing us that the battle of those who believe that inflation will be rising, 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 versus those who believe that a recession is coming in and that interest rates should come down is having a clash right now. Those who are selling and those who are buying bonds. Honestly, I'm bullish on bonds, but this sell-off here from 5 point, I just want to see, let me move this over here. Let me see, what is the percentage? Yeah, that's a 23% drop. That's not a small drop. Last time we had this drop, okay, a sizable drop, 23%, you had another 30. Yeah, I mean, yeah, it's percentile. So, yeah. So it suggested a much bigger move. Now, I don't think we're going to see zero interest rates, but you can tell throughout the history of the front, whenever you see heavy selling like this suggests a long way down. Look at this. Long way chop, consolidation down. Okay, so this is not something to look at and consider as something of a speculative action. This is something that has a high probability of flashing recession, and those who are considering that bonds is a safe haven. Now, this could be bullish in the short midterm for the stock market. And this is what I wanted to talk about. I wanted to talk about Bitcoin. Bitcoin has bounced a little bit. This is the monthly, okay? If we look at the monthly, the levels that I want to see this consolidate is above these levels. If we do, then we're going higher. If not, there's a possibility we might be getting lower. But this is not what I really wanted to show you guys. I wanted to show you the correlation. I don't really like this expression. Correlation is not causation. Because I find that these charts here uh, not only suggest but indicate the importance of money supply, the importance of liquidity. Okay. Now, a lot of people may laugh because it's an overused term. But look over here. Okay, look at what China has been doing since 2024. It has been expanding its money supply, more money in the tank, and recently that has also bounded the bounced the Chinese stocks. So we see that if we cross this level here of the early 2024 levels, just pre actually, yeah, over here, if we bounce back, this could go way higher. Okay, like way higher. Okay, these 1-2 moves are very powerful, especially when it's on such a strong uptrend. This again suggests that money circulation will go into certain aspects that perhaps are underappreciated right now, and we could see huge money rotation into assets that are underappreciated, like some of the precious metals, etc., or industries. Japan. Look at Japan. Higher uptrend. Sure, you had this dip here after COVID, but look, it's been an uptrend ever since. Yeah, these smaller 1-2 waves, but we can see that we're going much higher here. Again, the euro. The euro is doing something that's interesting. As you can see, the Asian quadrant is increasing the money supply because they're coming off of a recession. They've been in a recession. So it's funny because usually the sun sets from the east. Okay, so I think that right now the West is going to follow those deflationary situations that the East has gotten stuck into. Look into the Eurozone. The EU right now has been decreasing its balance sheet. Okay, with what has happened with Germany and especially the other countries, this is not really a good indicator because this suggests that liquidity is drying up in Europe, and this will create lots of problems. So we might be in the tailwinds of perhaps a massive liquidity crunch that will be felt, and it's already being felt. But this might be just the beginning before we see a huge a liquidity spike. Because let's not forget, it takes some time in order for money to be borrowed by the commercial banks into the markets, into the businesses, and to sustain the business cycles. Okay, now let's look over here. This is what I really wanted to allude the whole video to. At the bottom you have Bitcoin. At the top you have the essentially the biggest central banks. You have the ECB, you have the Fed, you have China, you have Swiss Bank, I believe here. You have a lot of global monetary supplies of capital, right? Uh, Look at this. Look at this. What's going on? This I got from Henrik Zeberg. And look at this momentous money supply. The pumped Bitcoin. It affected Bitcoin at least. Coming down off of it, you could see this rounding. You saw this drop those few months. Then the ejection started, and almost to the T, you're seeing the reaction. Now, what is interesting is we're seeing this bit of a divergence here. The last 3 months, if you notice, what's very interesting here is that the liquidity of these central banks has been decreasing. Has been decreasing. This could be just one step down before we go much higher into the trillions, but this is 2 trillions over here. 2.4 trillions, if I'm not mistaken. That's quite a bit. And this is the stage where Bitcoin really rallied up strongly. So either we're seeing a divergence of the money supply into Bitcoin, meaning perhaps that this could be institutional, meaning that there are a lot of governments around the world who are chiming in, who are buying Bitcoin, and that this is a huge institutional play aside from the central banks who are supplying the liquidity. So this could be a very bullish chart for the long term that shows that there is a bit of a detachment from what the central banks are doing. So I don't want to go into other indicators, capacity utilization, how many resources essentially is put into factories or manufacturing to produce goods. We see this dropping, so this hits a recession, especially here. Yeah, you can see Zeberg report over here. That's where I got it from. I thought it was very interesting. I wanted to share it with you guys. Strong PMI, weak PMI. Yeah, there are a lot of indications that we're heading into a recession. And I think what I showed you earlier with the bonds could be an indication as well. Now we have over here the research from these independent investment strategies. Yeah, from this firm here that does a lot of this forecast. This is essentially the roadmap of what could entail given some of Trump's policies, right? There is a projection of above potential growth that will continue in 2025. This, of course, doesn't really follow the PMI or suggest the takes into consideration capacity utilization. I'm really interested where are they getting this from, but the point here is that if you have tax cuts and deregulation, this is very positive. This is very good. In terms of equities, right? It's very bullish. Tariffs, I don't believe that tariffs can necessarily bring inflation up. Some goods, yes, but some goods it can drop quite a bit. And I do believe that with the advert of AI and other technologies, we will see at some point um, deflation in certain items. Um, Deportation, anti-immigration. I think this is very good for the US and a lot of countries that are right now struggling. I don't know why this would be inflationary. Um, I don't believe this because the government has to print more money in order to support immigrants. Immigrants are not coming in bringing wealth, bringing the the knowledge. It used to be that case, but if you look at the immigration waves, they're coming from third world countries that are devastated, either going through natural resources deprivation or political instability or upheaval. This is very premature, but also I think this is a bit political because to deport somebody who is looking to take from the welfare, who's looking to take away from the government, is not something that supports the economy overall. And I think it's bearish if it comes in mass numbers. It supports perhaps the government because they get new voters, but immigration has not really been helping European countries. Look at European countries. There's been massive utilization of capital in order to support some of these subsidies for the immigrants coming in. Okay, so I do think that this is a bit off. Um, it's an interesting read nonetheless. US growth momentum is solid. I don't see how this is solid. I can see that it's above the mean here, but I don't find this a solid one. It's actually data has surprised on the upside. Interesting. Anyways, core inflation is bottoming out. I don't know. The government really hides very well inflation because I do think it fears its people. What else? How long is this video? I don't want to take this too long, but if we look at the 4 hour, we're looking good. We're looking good. I want to see more power though. I want to see one, two, three strong green candles, like these type of candles. I want to see big candles here in order to make sense of this. This could be just a small mouse type of bounce before a bigger drop down to the high 80s. It's possible. Would it be bearish? No. But that's what I had for you. I hope you enjoyed the video. Please like, comment, subscribe, and thanks for the support. Bye for now.